Welcome to Cash Chats with me, Andy Webb from BeCleverWithYourCash.com. This is the podcast to help you make the most of your money. In episode 365 is a special Your Money This Month edition where myself and a guest, for this time it's personal finance journalist Amelia Murray, look back at some of the big money stories from the last 4 weeks or so. That includes potential changes to the state pension, predictions for what might be in next week's budgets, changes to Tesco Clubcard Prices, and much more. But let's waste no more time and get into it. This is episode 365 of Cash Chats. Amelia, thank you so much for joining us on Cash Chats to go through all those big news stories in the world of personal finance from the last month. Before we get into it though, do you mind just sort of telling everyone listening and watching who you are?
Yeah, sure. I'm Amelia Murray and I'm a freelance personal finance journalist.
Lovely. Yeah, we've known each other for a while now. I don't think we crossed paths at Money Saving Expert, did we? But I think somehow in the world we've known each other for a good long time now.
Just everywhere else.
Yeah.
Yeah.
So obviously, I say that when we do this every month, there are so many stories, we can't cover them all. And obviously, some things we have already covered in previous episodes of Cash Chat, such as the energy price cap change. So we won't be looking at that again. But one of the first things I think is worth talking about are the predictions for the budget, which is taking place next week. And I think most of these things generally we might hear early next week, but there are already been a few things that have kind of been mooted. What are some of the big things we might expect from the Chancellor next week?
Yeah, it's the rumour mill, which is more exciting than Christmas. I know for every kind of personal finance journalist I've ever worked with, it's an important time. What we've got at the moment is rumours circulating. We may be due another cut to national insurance. So what's being suggested is the Chancellor could cut national insurance by another 1 percentage point. We did see this announced in the autumn statement last year, and the cuts came into place in January. So we saw the main national insurance rate cut from 12% to 10%. So that's one of them. Critics are saying, is this a wise idea? How is the government going to pay for it? So that's, something that's being considered. It works in line with the messaging of the government, incentivizing work. But if you look at the polls after the autumn statement last year, it actually showed that decisions to increase the national minimum wage and the state pension were better received. So not sure what's going to happen with that one.
It's interesting as well in that just a few weeks ago, the rumours were actually there's going to be cuts to income tax and all these kind of things. And they were saving up this big pot of money that they'd somehow come across for these kind of much, much bigger things. And it's been massively scale back, at least in these rumors. We won't know till next week, but this is also in the kind of that bigger kind of the fiscal drag, as everyone, or the cool kids like to say, where effectively because we're all earning more money and the income tax bands haven't changed, we're actually getting taxed more despite that national insurance cut in January and potentially another one. So mixed if it comes along, but I guess we'll wait and see. Anything else of interest?
Yeah, there could be changes made to the lifetime ISA. So the Chancellor could cut the penalty from 25% to 20% and raise the property price threshold from £450,000 to £500,000. So this is a really interesting move, and we've seen in previous budgets kind of measures introduced to kind of woo the first-time buyers or like the younger voters. So this is, it's well placed within these kind of conversations. What we saw with the LISA is when it was introduced in 2017, the property market was completely different. Actually, property prices have increased by 30% since 2017, and yet the property threshold has never changed. And campaigners have really kind of criticised this because if you're charged a 25% penalty fee because you don't fulfil the criteria, you're actually getting less out than you put in, which is really unfair.
Yeah, it's a big frustration for people, hasn't it? That kind of, you get that 25% bonus and people sometimes get confused that you also lose 25%. Well, surely that brings you out even, but it doesn't, because you end up I think it worked about 6.25% less than you actually put in, is if you took the money out for either not because you didn't buy your first time or you didn't leave it till retirement. And it's not great, particularly when people need their money. So if this does finally go, and it does look like all the indications are that it is going to be that you put money in, you take it out. Yes, you lose the bonus, but you don't lose anything more. That'll be really, really good. But yeah, the 450,000 thing, I know for a lot of people, I think that's still absolutely massive. That's not going to be a problem. But in parts of London and the Southeast, actually, and if you're buying together, as a couple, might have a bit more money to go towards your first home. Yeah, it needs to move with the times. It's mad, 30%. That's crazy.
Hmm. Yeah, it's been kind of on the cards for a while, this conversation, especially as you said in cities and London, and
Mm.
the first time buyer age is getting older, and but they still need the help, especially kind of with the deposit. Um, and the whole rules of the LISA was set up to stop people misusing the account. People are still using it, but just the threshold has changed.
And then what else? I know there's not been much at all, really, has it? There's only one other kind of big thing that I've spotted, which is around potentially a tax on vaping.
The best till last. Yeah, so, so yeah, quite an interesting one. At the moment, vapes are subject to VAT, but they don't have like a specific levy like tobacco
Yeah.
would or alcohol would. So there's kind of discussion around this new duty being applied to the liquid in the vapes, and the higher tax rates for products with more nicotine. And the reason I find this really interesting is because this often comes up in budgets as well, like the sin tax. So it's on the booze,
Yeah.
tobacco. And it's one way, I guess, for the government to gather funds. But what we've seen, I guess, in younger generations is this idea of like the clean living lifestyle. They're smoking less, they're drinking less. Vaping is still seen as a kind of a better alternative to tobacco. So there's probably been a decline in these sin taxes because of the healthy Gen Zs.
Yeah. I mean, if it does generate a huge amount of income potentially, then, that's good for the government. But obviously, if people who have maybe moved from smoking to vaping, then that obviously be an extra cost for them. We'll find out. We'll do a full detailed video and article on Be Clever Your Cash next Wednesday, and a podcast episode either Wednesday night or Thursday morning, letting you know everything that does happen in the budget itself. So there might be some, as they say, rabbits out of the hat, don't there? Some surprises. It is an election budget. Effectively, the election is going to happen this year at some point. So I'm sure they will try and do something there that makes them appealing to voters, but we'll let you know. Now, I mentioned before that one of the reasons we haven't potentially seen some scaled back at least, predictions of what's going to be in the budget is because the UK is in a technical recession. That was one of the news stories from this month. What has happened and what does that mean?
Yeah, so recessions have such a horrible ring to them, don't they? I
Yeah.
remember still, the one from 2008. It has the power to create panic because it's negative news. But essentially, a recession is defined as two consecutive 3-month periods or quarters where the economy shrinks rather than grows. So if you want the numbers, the UK's GDP shrank 0.3% between October and December, following 0.1% negative growth the quarter before. And I guess if you put it into context, it makes sense because people are spending less. And we've seen this real dent in consumer spending power because of the cost of living crisis, high inflation and expensive energy bills. Lots of people just have less to spend. The worry is, what we've seen before is can be redundancies, there can be people struggling to get work, businesses closing. But what experts are saying about this recession is it will be mild and short. So yeah, that's something to hold on to.
Yeah, and I guess we've got the next Bank of England Monetary Policy Committee meeting where they will talk about interest rates. Isn't far away, is it? It's sometime in March. So be interested to see how much that's impacted their decisions there on what they do, whether they do sort of like, keep where they are or look to kind of, to cut the rate. So I think it does seem to be the current thinking is still kind of those cuts have been pushed back to later in the year, assuming they happen. And as we know, these things change all the time. So we report what happens when it happens, and then we can just speculate like everyone else is on the rest of it. With the recession, I mean, this isn't directly obviously linked to that, but it is kind of indirectly part of it. We have seen, I think, for the first time since middle of last year when Wilko went, we've seen another big high street brand suffer the result of people not spending money, and this is Body Shop. What's happening here?
Oh, RIP. It's another blow to the high street. Are you a Body Shop fan?
Do you know what I am? I am,
Yeah.
because the animal testing stuff, that's really important to me. It's one of those things I always think about when you make decisions with ethics. And it's a thing that not everyone agrees with, but you can't do everything. So you've got to kind of like choose where you can put the time and effort, but also where your budget can allow. And that was something that always I felt I could afford. Yes, I could have got cheaper shower gel and deodorant elsewhere, but I knew there that it was going to be, the animal testing wasn't there at all. So it's always been a regular for me for decades, I would say.
And it was doing, like, the Body Shop was like trailblazing that whole, with the ingredients and the animal testing, like back in the 70s and 80s when, it was kind of unheard of in like the cosmetics industry. So yeah, it's a real blow. Competition has kind of changed the market. But essentially last week, it was reported that the Body Shop was going to shut half of its 198 stores, with 7 closing immediately, and this includes the flagship store on Oxford Street in London. Reportedly Next, like the other high street retailer, is kind of keeping an eye on things, shown an interest in maybe kind of buying Body Shop or kind of stepping in. However, even if it does, it's not going to save the stores.
No, yeah, I think it's so that half the stores, in theory, the last thing I saw as well was that half the stores will stay open. And my local one, they actually think they're going to stay around because they're apparently one of the higher performing ones, but we still don't know. It's still up in the air. And this is something I had to do as well. If you've got any gift cards, use them, because at the moment, the administrators are still allowing them to be used. And in theory, if the business does continue in some form online and some stores, that's not going to be a problem. But we've seen it before with shops disappearing. It's like, right, administrators say, no, we're not going to take gift cards. We're not going to allow any returns, anything like that. So you've got to, as a shopper, you've got to kind of act pretty fast for that. And I had that. I had some loyalty points that I earned. I had about 15 quid of loyalty points I had to go and use. And I also had a gift card. So I did a quick order, which was a bit risky, but what did I get? I got some shower gel and deodorant. That's basically what I get from Body Shop. So I've got a good stockpile now in case they disappear.
Mm-hmm.
But
yeah. So that, definitely guidance. And you can use the gift cards online and in store at the moment. It is a little bit risky kind of, with the online, because you're not sure kind of what's going to happen between ordering and getting your order. But definitely try and spend it as soon as you can. Also, if you have those like the multi-branded gift cards like Love to Shop, they're also still accepting them at this time.
Yeah, it is good. I mean, compared to a lot of the other stores that have been in trouble, this is a much better reaction from the administrator in terms of what we can do. So it's good news for us at the moment. Also hopeful news that means it will continue in some form and not ever disappear or get eaten up by a different brand. Now, let's move on now to a story about Tesco. And this is, I think, amongst all the gloom we're talking about today, because a lot of these stories have been a bit gloomy. This is, I think, a good news story for consumers.
It is. I think there's still work to do, but so basically Tesco is now going to be including unit pricing in its Clubcard offers. So this is when you're walking around the supermarket and you can see the main price on the shelf, and then underneath, kind of smaller, the price per 100 grams, per litre, per unit. And until this point, Tesco didn't include this in its Clubcard offers, which kind of, unless you know how much a tea bag weighs, it's going to be very difficult to kind of compare if you're getting a good deal with the offer. So it's brilliant in terms of transparency and allowing shoppers to kind of make better choices because there's more visibility. However, there is definitely still more work to be done. I don't know if you've seen this in the supermarket, but the Competitions and Markets Authority did some research last year where they uncovered all of these problems with the unit pricing. And, tea bags, you've got some that the unit pricing is per tea bag and some is per 100 grams. You've got like laundry detergent being priced per wash or per milliliter. I think, I've had it in sort of like the fruit aisle before.
Bananas.
I don't know how. Yeah.
It's a nightmare.
So it's still some way to go, I think, with ultimate transparency. And just because you've seen the bright yellow, special price doesn't necessarily mean you're always getting, the best price. There might be like a cheaper brand kind of just along the aisle, which kind of could be better for you.
Yeah, I'm saying I love price per unit, but I also find it incredibly frustrating. And they'll do things as well, not just, sometimes the worst ones are the ones you give example of, like where it's completely different things. It's per item, you can't compare them. But sometimes I feel like they're deliberately trying to confuse us because, again, not all supermarkets might do this, but many of them do, where it might be one item is per 100 grams, the other one's per 1 kilogram. Now, okay, technically it's the same, but it just makes it why not just do it exactly the same rather than you having to, in your head, just move that decimal point? It's not hard, but for a lot of people, it just becomes quite off-putting. So yeah, you're right, a long way to go, but at least we've got this far, and hopefully other places will follow suit.
Yeah, my pet peeve is the loo roll. So some are per
Oh,
sheet and some are per roll. And I'm like, I don't know how many sheets are in a roll. Who does?
no. But then also, I mean, we're just going down a bit of a tangent here, but sheets can be different lengths as well. So yeah, but it's better than nothing at all. Now, sticking with supermarkets and sticking with Tesco, but not necessarily on groceries, but on their banking side, there's been an announcement they are going to sell their business essentially to Barclays. What does that mean?
So there's not much to kind of know at the moment. So the sale of Tesco Bank to Barclays is expected to take place in the second half of this year. Affected customers will be people who have the credit card, loans, savings, Clubcard Pay Plus accounts. It won't include Tesco Bank's insurance. That's kind of completely separate. Tesco are saying there's no immediate impact on your account and any important changes will be communicated before the sale goes through. But what we do know is you'll still be able to earn Clubcard points on your credit card and on the Clubcard Pay Plus, and your savings will continue to be protected by the Financial Services Compensation Scheme.
Do we know yet if it's going to be combined with Barclays or whether they'll be separate? I imagine it means that, it's still about people who have more than £85,000 in savings. But if you have got more than 85K when this happens, and some of it's with Tesco and some of it's with Barclays, then potentially I think it'd be the same 85K there. But I guess we'll wait and see nearer the time what happens.
It's also an interesting move in terms of the supermarkets who went into banking, because it was just last month that Sainsbury's, kind of suggested that they were ready to get out of the banking business. So yeah, I guess it's like difficult competitively with, the big NatWest and Barclays. So yeah, I wonder what's going to happen with Sainsbury's Bank as well.
Yeah, I know it wasn't a couple of years ago that M&S closed all their current accounts. They still obviously have some products, but really kind of scaling back their presence there. Yeah, I suggest it hasn't really worked too well for them if they're all kind of getting out of it. And they'll probably tell us they're focusing on lowering prices for customers instead. As long as they tell us the price per unit. Yeah. So we mentioned obviously savings there in terms of, potentially making sure your money is protected if you've got Tesco savings and Barclays savings when this happens. But there was an interesting report this month as well from the Resolution Foundation on emergency savings. What were the key findings here?
Yeah, this is really shining a light on some insights about the UK and savings and financial kind of overall. What the report said was more than 11 million working age people, which is the equivalent to 1 in 3 households, don't have a basic rainy day or emergency fund of at least £1,000. So this is quite worrying, because the whole point of these funds is, to help you withstand a financial shock. And what this is suggesting, that 1 in 3 households are vulnerable to unemployment, family breakdown, financial emergencies, which can lead to getting trapped into borrowing. So the report also said that those with lower levels of savings are more than twice as likely to use credit cards, overdrafts, or borrowed money than those with £1,000 set aside in an emergency fund. So yeah, it's really worrying, because those who are already financially vulnerable could potentially get themselves in more difficult scenarios, or not get themselves in, but have no other choice but to borrow with, interest rates and kind of get stuck in that cycle of debt.
Yeah, absolutely. It's obviously, this is a huge number of people. 1 in 3 households. That is absolutely massive, isn't it? You think about all the things that could happen, and there will be some of those households where it's a budgeting thing, and they could afford to if they wanted to. But for a large number of people, it will be more about, just not necessarily having the cash in the first place, or not feeling they have that kind of space to find extra money to put aside that emergency, because they need it every week. But there is I think a pretty interesting scheme out there, and I know is under review, so we'll see how if we hear anything about it next week, maybe. But it is something to know about if you are one of those people who don't have any savings right now and you are low income. And this is the Help to Save scheme.
Yeah, so that's a type of savings account that's backed by the government, and it allows certain people who are entitled to working tax credit or receiving universal credit to save. If they for every £1 you get a 50p bonus on top of that. You could save between £1 and £50 each month for a duration of 4. But there's no pressure or kind of obligation to pay when you don't have the money. So you haven't got to, create a rolling kind of monthly saving. But the bonus is really worth it. If it's a 50% interest rate, then it's kind of, there's nothing else kind of comparable.
Yeah, it's unbeatable, isn't it? And it's just helping you. That's why it's called Help to Save. It's just to get you going, so you've got something there if the worst is to happen. And like you say, that means you don't have to then resort to paying interest on that money that you might borrow, whether it is a credit card or a loan or an overdraft. So let's move on now from savings, which is linked to state pension, because this is something which everyone thinks they're going to get later on. Obviously, they've got to make your national insurance contributions to do that. But at the moment, the age is set to change to 68 not too far away now. That's going to change. But there's been a report suggesting that's not going to be enough. What's going on here?
Yeah, it's another bombshell, isn't it? I feel like the goalposts of retirement keep getting further and further away. So this has come from the International Longevity Centre. So this is the UK's leading authority on the impact of longevity on society. So they do lots of research and reports on health and aging, and they work with governments, businesses, academics to try and come up with solutions where they say everyone can thrive regardless of age. But what the latest report has said is that the current state pension age is not high enough. They're suggesting it should be 71 or and the reason that they've given for this is because they've noticed high numbers of people leaving the workforce prematurely, so before they reach the state pension age, which they're saying is due to preventable illness. And if you kind of look at the economics of it, where you've got a smaller working population whose taxes fund the state pension, and then a growing non-working population, there's going to be problems there. So it's basically saying we need to work for longer to sustain the state pension.
Yeah, so I mean, this is something which has been sort of spoken about for a while now. This idea that the age is going to get higher and higher. We already know, as I said, that it's scheduled to sort of move at some point to 68. So that's what the official age for me would be, 68. But I've known for a while now that's the likelihood of that happening is so low. And even if it means it's getting older and older, I think we should also be a little bit prepared for the fact that it might not exist for some of us when we get older, because there is such a huge amount of pressure on, as you say, getting that money from taxes to pay for an older population, a growing population, that, you delay when you get it, but that still might not be enough. So, I mean, this is not what the report was saying, but I wouldn't be surprised if it's means tested when we're older and things like that. So you can't just rely on the state pension. You've got to be sort of paying into your workplace pension. You've got to try, if you can, make sure you're getting those matching contributions. If you're freelance, make sure you're saving into a personal pension, a private pension as well. And then, try and put as much as there as you can on the assumption that maybe this will be pushed back or you can't get it. It's scary stuff. It's depressing to think about it, isn't it? But
yeah, Andy, you're also going to be making headlines tomorrow. Andy Webb says state pension won't exist. Oh my goodness.
It's just a pessimistic view on things, isn't it? I mean, look, wouldn't it be great if in about 30 odd years, then I'll know if I was right or wrong. So February, as we said when we did the episode last month, the new year is when we hear about all these price increases. In February, just in the last week, we've had O2 and Virgin with quite high ones, Ryanair hiking price as well. But the big one that is going to impact pretty much all of us is council tax. And we kind of we know every year that councils have a bit of flexibility in how much they actually increase. And they often, over recent years, have gone for that higher end on the whole. And it looks like that's going to be happening again this year, doesn't it?
Yeah, it's known as Awful April for a reason. And from the 1st of April, millions of people are going to see their council tax bills rise. Most local authorities in England are preparing increases of 5%, which is the top end before they have to call a referendum to kind of make further decisions, which means, a typical bandy bill is going to see a rise of another £100. which is significant to kind of any household. There are some councils that are also applying a larger increase, and these are the ones who are in financial difficulty. So Birmingham and Woking, for example, are allowed to raise council tax bills by 10%.
Wow.
And these are kind of two councils that have declared themselves bankrupt. So yeah, it's probably the awfulest of awful April with this one. The good news is in Scotland, there's a council tax freeze. So good for Scotland. And in Wales, the increase is between sort of 5 and 10%. So not so good news over there.
Yeah, and the thing about council tax is that it's unlike other bills. There's not really much you can do to bring it down. I mean, is there anything you think people who are worried about this increase, anything you would suggest they might want to think about?
So I actually have a success story.
Okay.
When I met my boyfriend, when he was a single man, he hadn't been claiming the single person discount, which gives you a 25% discount.
Yeah.
And being the money geek, that's how I would. I was like, wow, you should apply for this in your single man days. And he actually not only managed to kind of change his status with regards to council tax, but he was able to backdate for his single years. He doesn't get it anymore because we live together, but what he lost in his discount, he gained with me. So
Yeah.
you're happy. So
Well, that's fantastic.
if you're living alone, you may be entitled to the 25% council tax discount, but there's also other scenarios where you may also get the discount as well. So if you're a full-time student, if you're a carer, if you're in certain benefits or you've had certain disabilities, there's quite like a wide scope for a discount. So it's definitely worth speaking to your council and finding out if there's anything they can do for you.
Yeah, and that checking up at the back date of it, that's really interesting because I'm sure a lot of people wouldn't even think to look at that. So that's that can obviously mount up I'm sure there'd be a limit on it, but that can really add up as well, I'm sure.
Mm-hmm.
One more, we haven't got much time left, but one more price increase, I want to talk about is trains, because this isn't necessarily a story that's happened last month. It's going to happen next week. So I thought it's worth us covering it. Prices are going up from Monday.
Yes.
Yeah.
So this is another kind of annual expectation with the rail fares. So they're going up by 4.9% on Monday, which is significant. But if there is a kind of silver lining, it should be a lot more. Usually the prices increase with the previous July's RPI index of inflation, which for 2023 was 9%. So yeah, it's still a rise, but it's not the rise that potentially we could expect. So this rise applies to what we call regulated fares. So that could be season tickets, anytime day tickets, off-peak, and super off-peak. So yeah, basically most of the ones that people buy.
Yeah, it's interesting because normally the fare increases would happen in January, but they pushed it back to March for this one. And that would mean that I imagine a lot of people, they've got into that habit of if they get season tickets, and a lot of people might not get season tickets anymore because they're working partially from home, not always in the office, but they may already have renewed because that cycle keeps going around every year back at the end of December. But it's certainly one to think about that if you are someone who does get a season ticket and you are able to kind of renew it now, then obviously you will get the prices now. Or in fact, any booking that you can make for in advance, and normally you can get like 12 weeks in advance for just normal everyday fares. If you do it before Monday, you will get those lower fees before the increase. So they're definitely worth taking a look at that.
It's also worth maybe looking into rail cards as well. Like I've got one. I've had one since I was a student. It came free with a student NatWest bank account, and I've like never looked back. So they're usually about 30 quid for the year. You can save upwards from 30% on your fares. So it can pay for itself within a few journeys. Look at the small print because some of them are better than others. So when I was under the age of 30, it was kind of unrestricted. And then as I got older, they were like, yeah, you don't get that sweet unrestricted discount anymore. So now, yeah, with my rail card, it's restricted to like London and the Southeast. And yeah, I can't travel in peak times, but it's still really saving me like every time I travel. So yeah, I'd look into it.
And it's also, I think, worth looking at how you book your ticket as well, because some of the apps and websites are cheaper than others. We've actually just covered that over on becleveryourcash.com. So I'll probably do that as a separate topic on the podcast in the coming weeks. Now, one more story to talk about here. Well, two, but one's a quick note and then we'll get into the other one. They did announce in February that we will finally get King Charles on our banknotes. That's going to come in from June. But actually, I mean, most of us, we're not using cash. We're not using coins that much. We are using our cards more and more and more and more. And there was a story that you wanted to talk about here when it comes to contactless and pins, which was really interesting.
Yeah, I love it because it's me. So what some research from Barclays has said is nearly 1 in 5 people can no longer remember their bank PIN to withdraw cash or make transactions when they get to the limit when you have to enter it. And I love it because I'm like, oh my God, there's been a lot of changes with kind of contactless payments. We've had the increase of the contactless payment limit to £100. And so very few people are probably using their PIN like on a daily basis or as much as they were. You've also got savvy people who might have a few cards with different PIN numbers as they kind of advise. So the changing environment of spending, and yet it's now kind of potentially backfiring for many of us, including myself. I'm like, oh God, yeah, I kind of need to take money out for something really specific, or I'm, being a bit jazzy in a restaurant and paying a bit over £100. But I'm like, oh, there's that awkward moment where you're like, now, what do you do if you can't remember your PIN?
Well, it's got for me, because I now more and more and more now, pretty much all my spending is done via my phone. So then you don't even have the £100 limit. You don't have that need to enter your PIN after a certain number of transactions because you've got that secondary authentication with your face or your thumb or whatever it might be. So I can't even tell you the last time I had to enter the PIN on my card. And I never get cash out. It's very, very rare I get cash. So I know what my PIN is on my main card. But you're right. I'm one of those money geeks with a number of different accounts, a number of different cards. And there are different numbers. So yeah, I wouldn't remember.
Your phone's your number? That's what you use in the first instance?
I use my digital wallet and I just use that to pay pretty much all the time now. I did an article and a video earlier this year looking at what's in my wallet. And I did talk about how I still carry some physical cards with me in my wallet just as a backup in case, the battery went or whatever. But I never use them. They just stay in there. They're just there as a backup. Now, I mean, fortunately, most of the cards I've got now, the improvements you've got with the apps are you can check your PIN within a few seconds, but obviously that does require you to have signal. So there are going to be moments where that sort of strategy can be a little bit risky. I mean, do you remember how often you've had to put the PIN in, like in the last year? Have you done it?
Not very often because I'm not really very flash, not really a big spender. But it's interesting because I think my spending habits changed over lockdown. So I used to bring out a wallet with a few debit cards in case one of them failed, or backup cards, loyalty cards. It would have a space for cash as well. So I'd have, my little all-encompassing wallet. And then lockdown happened, and I was like, I would just walk out with like a debit card in my sock. Women's clothes don't often come with pockets. So, we have to make it work for us. So I'd have that in my sock and I was like, oh, I can just have this one card. But again, contactless, tapping. I'd have my phone on me, but she's an old lady, so the battery doesn't always last as I'd like. So yeah, and as I've just kind of become reliant on one debit card, and that's just what I have in my pocket with my door key, and that's all I go out with. And I cannot remember the last time I entered my PIN. And I think I remember it. I'm just trying it in my head now. But
well, you have to test it out.
Yeah, but are you confusing it with your online banking PIN, or is it, all the kind of in the bigger sphere of passwords and codes and those kind of things? I'm like, oh, I hope I've got the right PIN for the right thing.
Yeah, and obviously that brings the danger if people are thinking they're going to forget it. They do those things. They write it down and they put it in the wallet with the card and things like that, which obviously is massively counterproductive. So I would encourage, if anyone's done that, if anyone does write their PIN down and keep it in their wallet, please don't do that. Please. Yeah. Amelia, thank you so much for joining us on the podcast to go through all those stories. Some really useful insights for everyone, I'm sure. If people do want to follow you and your freelance work, what are the best places for them to go?
Yeah, well, thank you so much for having me. And if people want to find me, I'm on X, formerly Twitter, at Amelia J. Murray.
Fantastic. Thanks so much. Well, that's it for this special edition of Cash Chats. I hope that you did enjoy it and you found things useful in there. Head over to becleverwithyourcash.com for more information about everything that we cover. Until next time, cheers.